maybe there's some new kind of cycle happening where like Bitcoin actually is serving as the store of value. And what we're going to see is instead of these just sort of like random, 4-year Bitcoin cycles due to supply, maybe there's like these business cycles we're going to see more where Bitcoin has been this place people are parking wealth. And then when they want to start doing things from it, we see cycles here. And so I think that's like an elephant in the room. And I think maybe it's part of Bitcoin maturing. Like Bitcoin, the capital will cycle back, right? And so I think the question of like, when is that going to happen?
Hello and welcome back to the Bitcoin Magazine podcast. I'm your host, Brandon Green. Today we have the Alex Leishman from River. We had a fantastic conversation. We talked about all sorts of stuff. We talked about the differences between, a Bitcoin, not a bank, but Bitcoin banking and services, as well as, what we're seeing in the treasury company space and how that looks different and similar, and where Coinbase could be building in different directions than what a Bitcoinized future looks like, and so many other things. And honestly, Alex is one of the greatest entrepreneurs in our space. River's been crushing it. And it was good to just check in and enjoy a little bear market combo with him. So I think you're going to love it. I learned a lot. And so without further ado, ladies and gentlemen, Alex Leishman. Okay, welcome back to the Bitcoin Magazine podcast. I'm your host, Brandon Green. Today we have the Alex Leishman from River. Alex, how you doing, man?
I'm doing great. Thanks for having me on.
Well, welcome to the show. We're sitting here middle of June. We have to start with the market a little bit. So we've taken a nice little nosedive back, dunking under 60K. We thought about hitting 58K. Things seem to be stabilizing now. Give us your outlook. Like, what have we seen so far? Is this just another cycle? What are you noticing about the recent price action with Bitcoin?
Well, we're definitely in a bear market. And I really, the way we think about it, there's kind of two ways we think about it. One is, how do we think about it for our clients? And then how do we think about it for ourselves? Internally, we've always run the company with the assumption that bear markets will follow bull markets. And so we've always sort of saved money during the bull markets so that we're very comfortable in the bear markets. So internally, sort of, we're always prepared for this kind of thing. So we've got, a treasure chest that we're deploying right now, like just building as fast as we can while the market's in a bear market, so that when the bull market does come around, we have the best possible product we can have for the market, or for our clients. I think that, if I had to listen to my gut, summer is usually slow in Bitcoin. And so if I was betting, I would bet, hey, the market's going to be kind of slow for at least through the summer. If we start getting a turnaround, I wouldn't expect it until like around election time, but it's also possible it extends. It's not out of the world of possibility if we're looking at if we look at previous cycles that we're in for another year or two of bear market. But at the same time, Bitcoin always kind of does what you don't expect, and the minute you make some prediction, it kind of makes you look stupid. So who really knows? It feels a little bit different than other bear markets. There's a few interesting facts from a regulatory perspective. Things have never been better for Bitcoin. And I think like in the last year or two, sort of there was like this elephant in the room, which was the stars have never been aligned more for Bitcoin. Why isn't it doing better than it was, right? Another interesting fact is like the AI bubble, right? For a long time, there was no really compelling, generally accepted tech trend that was going to like transform the world, right? In the like 3 or 4 years ago. Now that's changed. We have this AI thing that's like, on the order of magnitude or more of the internet. And so that's sucking out a lot of capital from the system. And when we have big IPOs coming up, we have the SpaceX IPO, and then we have all of these AI IPOs. And so I think a lot of people have been pulling their capital out of Bitcoin and deploying it into things that they think are going to be very productive areas for their capital to grow. And so I think we're in some, maybe there's some new kind of cycle happening where like Bitcoin actually is serving as the store of value. And what we're going to see is, instead of these just sort of like random, 4-year Bitcoin cycles due to supply, maybe there's like these business cycles we're going to see more where Bitcoin has been this place people are parking wealth, and then when they want to start doing things from it, we see cycles here. And so, um, who really knows? But I think that's like an elephant in the room, and I think maybe it's part of Bitcoin maturing. Like Bitcoin, the capital will cycle back, right? And so I think the question of like when is that going to happen? Then there was, lastly, I'll wrap it up. There was also a dynamic of a lot of early whales just selling, like kind of, I think 100K was a psychological number. Imagine you were an early whale, you were in maybe your 20s or 30s when you were stacking sub $100, sub $10 Bitcoin. Now you can afford the lifestyle that you know you thought you realize, hey, if I sell this Bitcoin, I can get the private jet, I can have homes around the world, I can like set up my whole bloodline for you know permanent comfort. And so I think we probably saw some of that happening too. But that's probably over, or nearing its end. And so I think that supply will probably have eased up here.
You bring up a lot of interesting points. And I want to kind of work backwards through them. But starting on that last one, I remember someone talking about, I guess this was like late 2025. They were saying, oh, this is like the IPO of Bitcoin, right? In some ways, this whole like IPO sort of back to back AI fest, Bitcoin was really the first one. It was the first product that really hit the mainstream market debut that kicked all of this off. And what their argument was is, oh, I've seen a bajillion of these IPOs, and what happens next is the distribution phase, where all of your early investors start to afford their lifestyle, and it delays sort of crazy price action to the upside for a while as that distribution phase sort of happens. And so, to like thread that to some of these other IPOs we're seeing, that's a very interesting thing to consider. And it's almost, you talked about the 4-year cycle, and is this a different type of cycle? This feels like the first deployment phase of Bitcoin, where there's truly things that are worth kind of buying at scale with your Bitcoin, like exposure to some of these new tech trends, etc. Um, and yeah, I agree. It's a very interesting time to kind of watch how Bitcoin behaves in that environment, because it really hasn't existed before. I was talking to my friend Joey over the weekend, and one thing that we were really discussing is just, if you take sort of the Peter Thielian stagnation of technology that we've seen for the past 50 years, maybe we're finally seeing that come to an end right now. And so it's a very interesting dynamic for Bitcoin to sort of exist through this phase transition of society. And so I don't know if you want to add anything to that, but I do see that as well.
Yeah, I do think that's a reality. There's obviously a lot, we could discuss there from a tech trends perspective, but I think an interesting thing to think about is, well, what does Bitcoin look like if it succeeds, right? And it's just this global store of value for everybody. And um, well, the reality is, in that world, there's still going to be things that are higher ROI than holding Bitcoin, right? If there was never anything higher ROI than holding Bitcoin, then humanity's in for like a really bad future, right? There should always be really compelling investment opportunities to build new things and invent. Uh, and so Bitcoin is still small relative to the global economy, right? And a lot of these a lot of these builders who are investing in this like game changing technology are also holding Bitcoin, and so you're probably disproportionately, your Bitcoin holders are also seeing like the best investment opportunities, right? Maybe sort of like every cycle here, as Bitcoin just gets more and more broadly adopted, the impact of these bubbles, these new technology trends will be less, but this might be like a first of its kind sort of situation.
Yeah, no, I think you're right. I think you're right. And so then to kind of bring this to River a little bit, um, one thing that I've tried to figure out on my end, just how is this going to look? What's the dynamic going to be? Is when you start having these Bitcoiners who are investing their capital into other opportunities that they're seeing, they still want to measure their wealth in Bitcoin. They denominate their wealth as a unit of account of how many Bitcoin do I own on paper, right? And you provide financial services to Bitcoiners, right? And so I'm curious, like you were talking about, oh, we're saving for the bear market so we can be building through it. We're building new products. We're looking towards this next cycle. Um, are those the types of products you guys are thinking about, or how do you sort of like how do you view this upcoming cycle, and what are the financial products and services that you're anticipating Bitcoiners are really going to be interested in?
So at our core, we have kind of two main bullet points for like what is important for our client. Number one is don't mess up, right? We should operational excellence, security, making sure everything always runs well and stays safe and secure, right? And then the second is people want more Bitcoin. So how do we help them get more Bitcoin? So those are like the two main things. And then there's of course everything else around that, like reporting and that kind of stuff, which is important. And so we're always thinking, okay, how can we help people get more Bitcoin? And so that does kind of drive how we think about future products. Um, but our focus on this year has been around one, seamlessly integrating fiat banking and Bitcoin. And by doing this, we are actually helping people stack more Bitcoin because by helping people get their cash and their Bitcoin in the same place, we can drive a number of sort of extra Bitcoin stacking optimizations and cost savings for people. So one, we have this Bitcoin interest on cash product. And so by being a really compelling place for people to store their cash and being able to delete their bank account, um, every dollar you have, every dollar you get paid before it gets used to pay a bill can also earn you Bitcoin by working towards being a place to replace your bank and say, hey, I don't need that Chase account that was paying me 0.1%. I'm gonna just have all my cash go to River and go out of River, and while it's sitting with us, it's also earning you extra Bitcoin. That's a big win for everybody. Um, the average bank account in the United States is losing $1,600 a year in interest to banks by just sitting in these like really low yield accounts that, people open an account when they're 16 or 18 and they don't really bother changing it. Bank of America, Chase, whatever. And, over the years, you're actually kind of handing away substantial amounts of money to these banks. And so we're trying to change that behavior and help people put that cash to work. So that's been a big focus of ours. And then internally, and so on the unit of account thing, I mean, I do think yes, a lot of people think about how much Bitcoin do I own, but also people really care about the dollar value. People still really, like most people, really just care about the dollar value of their overall wealth because that is what maps to the real world. That's what maps to like your ability, your spending power, your purchasing power in the real world. So internally, right, River, we always make sure we actually have a really good chunk of cash, because that allows us to guarantee that even in the worst Bitcoin markets, we can be there and build for our clients. Now we still hold we have definitely have like a very big chunk of Bitcoin on our balance sheet, a very big portion of our treasury is in Bitcoin, but if it's sort of this ironic thing, like if you're building in Bitcoin, you actually need a healthy chunk of cash to make sure you can keep building when things are bad. And so actually people fault Coinbase a lot for like not having a lot of Bitcoin. But honestly, if you're running a business like this, you kind of understand because if you've been through so many bear markets and you're like, well, if I only have Bitcoin in the next bear market, I might just go broke and run out of money. Like that's not, you can't, it's hard to build a company around that. So that's like just an interesting, like,
On that note, like you were talking earlier, this is like the first part of your answer was, it's the bear market, and we kind of look at having a nice treasury to use in the bear market to build for the bull market. River's been around since, is it 2019? Did you all
yes,
officially launch? So you've been through, basically, this is your third bear market as a company. Launching in a bear market's always fun. But
yeah,
I'm curious, like you're hitting on something very interesting, which is the true game of Bitcoin as a company is to survive. You just
yes,
need to survive the bear markets, and you like the number one way to survive is to never become a forced seller, right?
yes.
And that is that's what I hear you hitting on right there is, you keep the cash so that you never get into a position where you're forced to be selling Bitcoin in a downturn, because that is the worst case scenario. That is when uh you don't sleep well at night because you're having to lose your sats in order to kind of fund what you're doing.
Yes, exactly. And people can often live on a Bitcoin standard, right? You can only have Bitcoin as a person, because you have a very, very, close control over your paycheck and your expenses. If you're a business, you need very predictable, sort of like purchasing power months or years in advance. And so there is a reality there. But I also think there's like this reality where my vision of the future is not that people only ever hold Bitcoin. I think that's kind of a silly vision. I don't think that's realistic and maps to just how the real world works. People want uh, to be able to save and spend in the easiest way possible, right? And I think Bitcoin is going to continue to be the easiest way to save, and dollars for the foreseeable future are going to be the easiest ways to spend. And that's like banking. That's like core banking, right? So I view like our vision of the future is like your core banking is going to be Bitcoin and dollars in one place, right? But stocks aren't going away. And that like if anything, like that might accelerate because think of all the new like companies that are going to come up if AI really uh, reaches its potential. And applying AI to like all of these different fields, we're going to see tremendous sort of investment opportunities across the spectrum. And so investing in that, investing in real estate, like all these other things, those things aren't disappearing. And so I just think banking is changing. And that's why River always took our approach. It's like, that's why we didn't build an exchange. Like I never believed that there would be a new asset class that crypto would create. Um, so it never made sense to me to create an exchange because I only thought there was only ever going to be one new thing that mattered in this whole industry, and that was Bitcoin. And what it was going to do was change banking, not not the whole sort of finance and investing world. And that's really the whole thesis behind what we're doing.
Well, and on that note, River deserves a lot of flowers because you launched in the middle of a bear market, and you've gone through two very distinct bull markets where there was crazy growth in the crypto narratives and NFTs and all sorts of stuff was springing around. And I'm sure in every single meeting that you took with any investor or any advisor, it was, why doesn't River roll out the red carpet? Like, why don't you just do all of the crypto stuff like everyone else? And you've always stuck to your guns and stuck to Bitcoin. But not only that, but also built the infrastructure, in house to be a Bitcoin, company, and not sort of rely on third parties, and have sort of crazy, unforeseen, just potential risks kind of embedded in the platform. And so you've done it, in my opinion, just an objective third party. Like, I think you've done it the right way and the hard way, but the hard way because it is the right way, and so I do think it's worth highlighting that as you talk about all of that.
Well, thank you. I appreciate that, and I think what really matters is like long term. Let's see if the market proves us right. I think in the last few years, we've gotten really strong signal that we made some of these decisions. We made the right decisions. It's kind of funny, sort of having built my career out in Silicon Valley, and um, it's like some of the best investments of the last, you know, century were these like really idiosyncratic sort of people in Silicon Valley that were making this contrarian bet, against the crowd. And what was so funny is like when I was starting River, like the most contrary thing you could do was say crypto doesn't matter, only Bitcoin matters. Uh, the general
100%.
consensus amongst everyone in Silicon Valley was crypto was going to change everything. Bitcoin's old. It was just like V1 because like the vast majority of Silicon Valley just never understood Bitcoin. They really did not. They thought it was a technological innovation when really it was a monetary innovation, and that's what they got wrong. And uh, and that's what I knew for much, just I didn't I realized this much earlier than them. And so now we have to be humble though, right? Like Coinbase is still way bigger than River. And I and you could argue that like, well, maybe it still it was optimal for Coinbase to do what they did because even if it was not a long-term sort of true secular trend that crypto was going to be this big thing, capitalizing on some fake bubble that lasted, 5 or 10 years was still like the right strategy because you could stack a bunch of resources and build a brand and grow a consumer base and then pivot into like what really mattered. But maybe that's not true, right? Maybe that gets them stuck on some local maximum and prevents them from actually reaching the global maximum, which is Bitcoin banking. And again, River is way smaller than Coinbase, and it could turn out to be that we never actually like get as big as them because it's so sticky. But an interesting thing to point out is Coinbase has never had their monthly transacting user numbers, so the amount of users that transact on Coinbase in a given month, has never surpassed 2021. In fact, even like last quarter, it was
Hmm.
30% below 2021's numbers. Whereas River, we've seen, you know, like, it's in a bear market, it goes down a little bit. Like ours are down off a little from, 2 quarters ago, but still like near all-time highs. And every year is just like all-time highs. And again, it's like we're comparing like little numbers versus huge numbers up here, but I still think there's something happening here that these big exchanges maybe haven't fully internalized.
Well, it's interesting, and if I were to like maybe put my own spin on what you're saying, or what I see is Coinbase and and some of these other exchanges, right? No need to just like pick on Coinbase by any means, but because they went with this broader crypto strategy, then much of their volume, much of their user base, much of their competitive edge came from kind of going out on the risk curve and getting to the more speculative bets or the newest flashiest thing that people didn't fully understand yet, and didn't know how to build a model around. And so the model became infinity, because it's like, how do you even how do you even value something that you can't explain? And so like that's where all the growth came from. And then to contrast that, if you're a Bitcoin focused financial institution, you're almost going the opposite side on the risk curve. You're focused on the understood, easy to model, like fundamental bet. Like you said, the one true asset in all of this, not the asset class. It's funny how that seeps into the design, the mission. It's one looks like a casino, one doesn't look like a casino. It's very interesting how that just has all of these downstream effects.
Totally. And again, like, Coinbase deserves a lot of credit. I mean, they made Bitcoin easy for millions of Americans, and that's where I bought my first Bitcoin. And I think I put off starting River for a long time because I thought Coinbase was going to take that direction. But yeah, I think people underestimate how much a single new degree of freedom in a business changes the trajectory of the business, right? And by degree of freedom, I mean, instead of just Bitcoin, multiple cryptocurrencies, or even little things in a product. Like, instead of allowing just one user to log in, I'm going to allow like multiple users in the same account with all of these different degrees of freedom. Instagram, interestingly, um, didn't add like multi-user support for an account, for like 15 years or something. And so
Mhm.
I think like the best um, sort of companies know where to stay focused and know how to sequence and know when the right time is to add the extra complexity or degree of freedom. And that's something we think about a lot.
Yeah, no, I love that. So I want to go back to something else you were saying earlier, which is, a River account. Is it considered a bank account? Just for the clarification's sake.
So that's a good question. The B word is, very highly regulated. River is not a bank. River does not have a bank license or a bank charter. River is on the Bitcoin side, we do everything in house. We have our own custody infrastructure. We have money transmission licenses in the various states. Um, on the dollar side, we partner with a bank, Lead Bank, which is a very high quality fintech bank, and that is what powers the Bitcoin interest on cash product. The any dollar movement that's going through a banking partner. So we're offering banking. We're calling it Bitcoin banking, but River is not a bank. The dollar side is powered by another bank behind the scenes.
Makes sense. So on the sort of Bitcoin interest on cash, it's offering, I think, like a 3% yield. Is that right?
3.30% interest rate. So and that cash is FDIC insured by Lead Bank, and again, that cash is at Lead Bank. Not River is not a bank, and uh, there's like the government regulators are like super 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 hardcore about this, so I have to be very clear.
Well,
And yeah, so
that's actually where I'm leading with the question, and so I want to sort of dig in because at the same time as we have this very clear product that you guys have, you're working with partners, it's highly regulated. You're seeing from the Bitcoin treasury space, instead of a 3.3%, 12 crazy amounts, right? But marketed or talked about in a very similar way of park cash here, get some sort of yield on it. And so I want to hear your perspective on that phenomenon. And if I'm, a simple Bitcoiner and I'm looking at these products that are out there, how should I be thinking about that sort of disparity in terms of, percentages and interest rates and everything? Like,
Yeah.
explain it to me like I'm five.
Yeah, it's a great question. So, okay, when you have your cash at River, if you have $10,000 at River, that $10,000 is always $10,000, and you can spend it whenever you need it. You can wire it out whenever you need it. You can pay a bill with it whenever you need it, and every day it's accruing some Bitcoin for you. And it's FDIC insured by Lead Bank, through Lead Bank. And so, if Lead Bank goes bust, all that cash, is up to $250,000 is FDIC insured, for you. So, now the alternative is like, some investment product that's, promise you 10 or 11%, but that product, aims to maintain its stability, right? But the price actually can fluctuate day to day. So that $10,000 isn't always $10,000. And also, if something goes wrong, it's all gone, right? So one is really an investment. That's like kind of a sort of, and that's like sort of a financial bet. You're sort of taking real financial risk and making a real bet that this, investment product is going to, uh, do what, you know, do what you think it's going to do. The other is like cash at a bank. Uh, so there's two very different sets of guarantees, if that makes sense.
Yeah, it does. It does. And maybe if I could like take a step back and give my best attempt at explaining the difference here. And maybe you can help fill in the gaps where I might be wrong or where I might be right. What you see from these two phenomenons is the river account, right? That's ultimately on the back end. It's a bank doing banking, which is they get a deposit, they turn around, they buy treasuries. They have a sort of portfolio of durations on those treasuries. They get a yield on that. They give a yield down to the depositor. Is it
Well,
roughly right?
yes, yes, but there's like an extra caveat with our bank. And again, like I can't promise that this will always be the case. But directionally, there's a policy that like any crypto related deposits, are just like kept at the Fed.
Hmm,
So they might not even being lent out. They're just like at the Fed overnight, uh, which is
interesting.
kind of an even stronger like sort of, buffer.
Yeah,
Yeah.
no, that's very interesting. Okay, so then that's the picture over here. And then the picture over on the sort of they're called like preferred, right? These preferred equities at a Strive or a MicroStrategy, right? What they're saying is that they are holding an equivalent amount of Bitcoin at some point of kind of your purchase,
Hmm.
and that Bitcoin has a financial performance roughly of, call it 20%, 30% a year. That they are kind of banking that performance to happen, and then because you're allowing them to purchase that Bitcoin, they're going to in turn give you 10% or 12% of the 30% that they're forecasting in the performance of the Bitcoin. And that you're sort of taking that spread bet with them on the Bitcoin price performance over a long run. Is that a
Right.
fair differentiation
Yeah,
there?
I think that's a great explanation. So I think sort of like the high level like bullet point is one of the deposits is sort of um, a very safe sort of, uh, demand deposit for cash that you really need to be sure is safe. The other is a cash is a cash product, yield product that's risk is correlated with the risk of Bitcoin, right? So the way we think about it at River is now. So by the way, I'm not saying you shouldn't hold that. I'm not saying you should or you shouldn't hold that. Um, uh, if you want yield on, if you want your yield on your cash, if you're okay with the risk of that being correlated to the risk of Bitcoin, then that might be interesting to you, right? But the way we think about it at River is like you have your Bitcoin, that's already risk correlated with Bitcoin. You you often don't want your cash to be, right? The reason you're holding cash is to make sure it's there for when you need it. It's like your cash treasury. One of the major rules of treasury management at a company is, you're not running a hedge fund, right? Your number one job is to make sure the cash is there when you need it. And so for most people, that's the purpose of cash, right? Is to make sure it's there when they need it. And so because of that, sort of in terms of like the risk profile, we optimize towards that side of things.
Yeah, no, and I think that's a very interesting distinction. And the reason I bring it up, or the reason that I wanted to highlight it, it's not to bash on in anyone or any product. It's more to highlight that these are really two different paths of trying to answer the question of how does Bitcoin fundamentally rewrite the financial system, right? And one is this idea of, oh, Bitcoin is this, capital asset. It's a savings tool. Save with it, and you can continue to sort of use existing rails, existing institutions, et cetera, et cetera. Um, the other is a like it's almost like we can build a brand new system with kind of new products that have never existed before, and we're pretty sure it's all going to work because Bitcoin is this pristine thing. But it embedded in that is this kind of recursive belief that not only is Bitcoin going to succeed, but it's going to perform, and the performance is kind of worth doubly speculating on with a product that's supposed to maybe be a little bit more conservative. And so I just think it's a very interesting kind of dichotomy or a divergence of products here. And it's not to say one, like you said, is better than the other, but
Totally.
yeah.
And I think at the end of the day, it all comes down to what guarantees do you want for your cash, right? If
Mm,
you have a lot of cash and you're like, yeah, it's like I'm willing to, put it somewhere else with a different risk profile for 10%, 12%. Um, I think that's very different than someone who's like, well, I also just want cash at the bank to make sure I can pay my bills for the next 6 months, right? So those are like two very different cash needs.
yeah. I'm curious. So to um, not pivot slightly, but has River ever thought about going public? I've seen you make kind of tweets in the past of kind of enjoying the private company life, But have you thought
Yeah.
about that? Is that something that you
Well,
guys talk about?
so there's two main reasons to go public, right? To build trust in your company and be very transparent. Um, and the other is to have this sort of liquid equity that you can use for, to grow your business faster, attract talent, do make acquisitions, things like this. Now, on the former, what we decided was, well, we're just going to be transparent without being public. We already publish our annual financial statements. And that's what we care about the most as a financial institution is being trusted and being transparent. And so, and I think people who keep their money with us deserve to know we're financially sound. Like that's just our clients deserve that. And so now being public is a huge burden, right? It forces you to kind of act a little bit more short term. You have no control over you have much less control over your cap table and who the forces that influence your company. Um, you may create a very large attack surface as well for your company through lawfare and things like this. Um, and so need a really good reason to be public if you're going to be public. The private markets are very robust these days. If people find your company valuable, you can do secondary shares to give early investors or employees liquidity, things like this. Um, and we're also just too small to go public. I mean, going public these days, it's very expensive. If you want it to go well, you need to be very, very well regarded in the like a sort of institutional investor scene. You need really, healthy, revenues, and all of our fundamentals are very good, but we're probably an order of magnitude away from the scale of business like a public company should be. Now we have seen, businesses in our industry go public. Who, in my opinion, shouldn't have. Um, Coinbase was at a scale to go public, right? I think a lot of other people were not, and really, like I think these small companies going public, it's generally just a very bad idea, uh, if you care about the long term health of the business. And so, and then lastly, like it's just less fun. Being private's awesome. I don't have to worry about like all like just extra busy work and again, like you need a really good reason to do it. So yeah, that's my take. That's my take on going public.
So
Oh,
no
actually,
public
last week.
announcement.
There's one.
Uh,
There's one last interesting thing that I really like, which is Epic Healthcare Systems, which is if you know this business, they run basically every hospital in the United States runs on this software. I call it Epic. And Epic was started by this woman named Judy Faulkner, and in the 70s, I believe. And Epic is a huge business today, worth tens of billions of dollars, if not $100 billion plus at this point, um, and has 10 commandments. And one of the commandments, if not the first commandment at Epic, is don't go public. Um, because Judy Faulkner understands like what that does. And so I'm not saying we'll never go public, but just some like random thoughts in my head about it.
yeah, no, I like that, and it sounds to me like you're not going to publicly announce your confidential S1 filing with Edgar anytime soon. So
No. Yeah, good, yeah,
uh,
good, yeah. I want to compete with Anthropic and SpaceX and OpenAI and getting institutional investors. I don't think I'm gonna. I don't think that would go too
yeah,
well for us.
at least not until next bull market.
No, exactly.
So
You gotta wait until you're the hot girl, and you know, you gotta know when your
100%.
timing is right.
100%. Yeah. Love it. Well, dude, so to kind of then pivot off a little bit of the public markets combos. Um, I am curious, like, and I don't think we've ever talked about this before. So I'd be curious your take. You've seen obviously Tether and USDC have really strong, performances in this past kind of 4-year cycle. The stablecoin narrative, in some way, has just completely washed out the crypto narrative, and become the main sort of crypto phenomenon. It's just tokenizing dollars. But I'm curious, like, how do you see this as like sort of the third body in the Bitcoin financial services, and then stable coins? Like, how do they interact in your mind?
Well, I think they're just all very different things. Like I actually don't even like the term stablecoins because I think it's kind of a distraction. It's sort of like a categorical error. Uh, they're just dollars. I think it makes it seem like something new that isn't. It's dollars. It's dollars that because of a Rube Goldberg machine found this loophole that bypasses all of this regulatory and bureaucratic and tech sort of friction. We wouldn't have stablecoins if the Fed was just like everyone can have an API key to the Fed and just transact dollars with any other account, right? Uh, with no KYC. So like they could have just done that, but they don't. And so we needed 15 years to develop this Rube Goldberg machine around it, and now finally we could just kind of have that. So it's just dollars. And I think that the overlap with Bitcoin is very super like surface level. They're just dollars. That's it. We just found finally a way around all of this regulatory burden for dollars. It's mostly interesting to the developing world. The U.S. government is on board because instead of euro dollar deposits where they weren't buying treasuries, you now have uh, uh, all of these deposits buying treasuries, and that's good for the U.S. And so really, I think it's just it's a monetary innovation, not a technical. Well, it's a technical loophole to finally just get like KYC free dollars into the hands of everyone in the world.
So then you guys are maybe the one of the leading sort of research outlets on the sort of market growth of Lightning, right? And some of these other layer twos. But a big, kind of fundamental force driving some of that is it's a way to bring tethers, into your USDT back into sort of like a Bitcoin quote unquote on chain system. Uh, how do you see that dynamic? Is that something that's interesting? Do you think it's a flash in the pan?
I mean,
Um,
stable coins on Lightning.
yeah, or taproot assets, or any of these sort of Bitcoin asset protocols that are starting to be built out. That
Hmm.
stablecoin seems to be like the asset that they're building out on it, right?
I think it's a cool idea. It all just hinges on do the two big stablecoin issuers actually issue on that? Um, and no one can control that, right? And so I think they haven't yet, and I think the question is, will they? And that's really up to them. Right now, all of the volume is Tether on Tron, and so would Tether on Lightning be better than that? I think it's for probably a lot of use cases it would be. So it's sort of like it's easy to theorize about, but really all that matters is just what does Tether decide to do, and I don't know what they're going to do there.
Yeah, I mean, I don't either. It is an interesting trend though. I'm curious, like, obviously I said earlier that you guys do a lot of research on sort of the Lightning Network. You're one of the major nodes on the Lightning Network. We talked a lot about Bitcoin as a savings tool. You mentioned earlier cash is sort of still the spending tool. Um, Bitcoin as that monetary network, not just the savings tool. Sort of, I think best is obviously flexed through Lightning node transaction volume and on-chain transaction volume. What are you noticing about those trends? You know, are they up? Is it increasing? Is it stagnating? Is it decreasing?
We've seen general growth in Lightning over the last few years, and I think that growth will continue to grow. I think Bitcoin's growth as a medium of exchange will continue to grow. But in the big picture, I think it's going to be a rounding error for quite a while. That's not to say it's not very important. It is. I think it's very important that we keep investing and building out Bitcoin's tools to have be a censorship resistant medium of exchange because Bitcoin stops being a good store of value if you can't move it,
Mhm.
right? One of the most important things for Bitcoin being a good store of value is that you can exit. And so that's why these tools are really important. And that's this weird thing about Bitcoin. It's like, well, I don't really want to self custody, right? Like no one really wants to, right? Like, yeah, I want to spend all this work doing all this stuff, right? Like that's not actually fun. Um, it's stressful and it's a lot of work. Um, and so but it's really important that you can. And so that's why these like scaling technologies are very important, building censorship resistant, layer twos, et cetera. And so that's how I view it. I think there's going to be a growing niche of use cases where Bitcoin as a medium of exchange is actually really just genuinely a better experience. But that's going to continue to be niche for quite some time. Uh, People will still primarily use dollars for transacting for the foreseeable future. That's just reality. Uh, and I think there's a few thought experiments and just pieces of evidence that prove that. One is if you look at places with hyperinflation, like Argentina, 5 years ago, no one was saving in pesos, but everyone was still spending in pesos. Like the network effects, the payment systems, the legal and tax system still sort of required this medium of exchange. Everyone had dollars, but no one was like you went to the coffee shop, you still use pesos. So that's kind of like, some real evidence that that's how things just kind of go. Let's say we have like the perfect tech, like the perfect scaling technology, censorship resistant, infinitely scalable, no fees, whatever, right? Like, would that actually change much today? Like, it'd be great to have, but like, would Starbucks this year start accepting Bitcoin payments? Like, I don't know. I don't think so. Because I don't think that's actually like the bottleneck. It's an economic sort of network effects thing.
Yeah, I guess maybe to steel man what you're saying a little bit. It's like it's less about Bitcoin's success is less about that. It is the number one medium of exchange, and it is more about that it can be the number one medium of exchange if needed. But
Yes,
that currently human civilization does not require that
correct.
because our fundamental issues with money of today is less about the rails that it moves on and more about the monetary policy that governs its issuance and its ability to be used.
Perfectly said. Much better than me.
Well, I don't know about that, but I think I was following what you were saying, and I wanted to make sure because I
Yes.
think it's a good point. I mean, I really think it is a good point, and so often we hear these criticisms levied at Bitcoin of like, oh, Bitcoin's failed because the blocks aren't full right now, right? And it's like we're sitting here at even a $67,000 Bitcoin price, and someone's with a straight face saying Bitcoin's failed. It's like,
Yeah.
what are we like? How are we seeing this so differently? Yeah.
And I think people look. I think like sort of like a lot of the loud people have a certain just constant adversarial mindset, which I think is a good thing generally for Bitcoin, but often I think they sort of often have a complex, like it's almost like a victim complex. Like there's like we always need to beat some system. There's always something to beat. There's always something out to get us. And I think like that's like healthy in some ways to always like know that, but also at the same time, like it's not a very good way to think about like why certain behaviors are happening, right? Because at the end of the day, like economics is pretty simple, business is pretty simple. It's like, are you solving a compelling problem for somebody, right? And if you're not, it's not going to happen. And so Bitcoin payments do not solve a compelling problem for 99.9% of consumers or merchants. Credit cards are really easy. Apple Pay is amazing. Uh, I can tap at a merchant and I don't even have to pay my credit card bill for 30 days. And that's just like all built in. Like, and I get rewards. Like, that's amazing. Like paying in Bitcoin, what problem is it solving for me? Right. Um, Maybe someone will figure something out there, but like, you
Well,
have to be realistic.
you do see, and I would say, like, to caveat what you're saying, for a consumer, right? There's nothing particularly beneficial or superior for Bitcoin payment versus a credit card swipe. But for the merchant, there is some amount of cost reduction if they're able to get final settlement within seconds rather than 2 weeks or 7 business days. And
Totally.
Visa taking a vig and all these, so there is something there that is trying to happen, but it's interesting to kind of watch it.
There are like that is like a common counter argument, and it's not wrong. It is true, but it has to really be material. And there's a long tail of stuff, and there's a long tail of new problems it creates. Right. For example, um, returns. Right. Like it's very common. My cashier put in the wrong number. I got to reverse it. Like that all that stuff is like sorted out for credit cards, right? Holds. So I need to put a hold because I don't know how much you're going to spend yet, right? You're like at a hotel. I don't know how much you're going to spend, um, and it will refund you the difference. Like there's all this stuff that just does like it's just not worth the headache, right? For these businesses, like they don't want to deal with that, and they're like they want their cashier to just like not mess up. And so I think there's like a lot of on the ground operational realities that are like, I think a lot of people forget about.
No, that's fair. That's fair. Well, so okay, we got about 10 minutes left, and I want to spend some time looking forward. Like we said in the beginning of the show, we're in the middle of a bear market. Maybe it's not as bad of a bear market as other bear markets. We'll see. But looking forward to the next cycle, into the next 4 years, and then maybe 10 years. Two questions. Number one, um, what does Bitcoin do over the next cycle to decade? And then number two, what will River be in that sort of environment?
I view Bitcoin as currently on a trajectory to become this global reserve asset. Um, I think the Bitcoin price continues to appreciate substantially over the long run. I think that it continues to, uh, you know, close in on the gold market cap. Um, And in that world, the role that I want River to play is, uh, well, our strategy is pretty straightforward. Our goal is to be the most trusted financial institution in Bitcoin, so that we can eventually become the most trusted financial institution in the world. And it's actually that simple, uh, and that's how we think about it. And so then okay, well, what's the business look like? Well, I think every financial services company at the infinite point on the horizon looks the same. They want as many of your assets as possible, under their purview, and they want to provide you as many financial services as they can. And there really aren't that many, right? There's keeping your money safe, helping you move it, helping you borrow or and lend, and helping you like buy and sell various assets, right? And so every financial services company is some
You
permutation of
forgot
that.
also NFTs, right?
Oh, right, yes, I forgot. Yes. Minting, mint your content on chain. I forgot about that one. So, but really, if you look at sort of how financial services companies succeed is they build the right client base and they ship they ship things in the right order. Um, and so really what you can think of us as is we're building this new, you know, this new financial institution on this wave of Bitcoin becoming the reserve asset of the world. And we're trying to, make sure we get the ordering right of how we do things to optimize that trajectory. And that's not obvious, getting that sequencing right. Doing any material new thing is a lot of work.
Love it. Okay, so then we got a few minutes left. Let me just rapid fire some questions at you. A little bit of a
Sure.
lightning round. Number one, are regular banks and other sort of neobanks becoming casinos?
I think a lot of neobanks are becoming casinos. I think a lot of regular banks are actually more sort of virtuous, uh, you could say, or more client focused than the neobanks. There's a business reality is the neobanks are giving a big chunk of the market what they want. People want to gamble. People, especially in this sort of fiat economy, um, a lot of people feel like they need to gamble to get ahead, and so they're just taking advantage of that. But traditional banks are actually, for all people tell them, criticize them for being slow moving and conservative, that can be a feature, not a bug sometimes. Do I trust JP Morgan more or Robinhood? I trust JP Morgan more.
Do you think that that Bitcoin is the solution to the sort of casino phenomenon, or like we said earlier, even or is this AI tech boom the solution? Will that cut through the casino phenomenon of finance?
Um, I think Bitcoin helps. I think at the end of the day, there's a steady baseline. Even if you have a Bitcoin standard or a gold standard from in central banks, people are still going to gamble. I mean, it's not like America. It's not like when America was on a gold standard, people weren't gambling, right? There's always going to be that. I think that's more of a cultural, moral question. I think it's a spiritual, societal values question more than anything. But I do think that inflation, asset inflation, and lack of social mobility, or sort of children feeling like it's going to be hard for them to be richer than their parents, um, really amplifies it a lot. So I think Bitcoin helps, but it doesn't solve the problem.
Okay, different topic. Um, you guys do proof of reserves. Should every exchange do proof of reserves?
Yes, every exchange do proof of reserves. There's no excuse not to do proof of reserves for at least Bitcoin. Yeah, okay, if you have 1,000 different assets, I can see how that's pretty complicated, but Bitcoin's pretty simple. And even if you don't want to do the full, assets and liabilities, like at least just prove how much Bitcoin you have every month. It's not that hard.
Love it. Was the Bitcoin treasury boom good for Bitcoin or bad for Bitcoin?
I think it was good. I think it brought a lot of institutional attention to Bitcoin and normalized it as an asset, but there might be some like amplification of pain in the bear market because of it.
Is it going to be the FTX of this bear market?
I hope not. I really hope not. I don't think there's like massive fraud happening. I don't. But in terms of like, does the financial situation just deteriorate and then cause a cascade? I can't say for sure.
Yeah, that was more what I meant too. Is the contagion, the cascade,
Yeah.
the marking the bottom. Uh,
Yeah.
so okay, cool. And then last question: what does River know about Bitcoin that Wall Street doesn't?
Well, I think even though I've been saying it on podcasts for 7 years, 7.5 years, Bitcoin is not a technological revolution. It's a monetary revolution. Um, Blockchain, crypto, none of this stuff really matters, and the market is telling everyone this. Um, and still they refuse to accept that, and because I think there's too many people who are going to get egg on their face if people actually just come out and say it. Although behind the scenes, I think like that ship has sailed.
Well, this feels like the cycle where that has truly been hammered home.
Yeah.
So it'll be interesting to see what happens next cycle, and whether they manage to find some new phenomenon to build the narratives around. But it does feel like it's landing with a lot of people now.
It kind of feels like this whole thing was like Bitcoin was the obvious thing, and then everyone's got to come up with some distraction so that they don't have to just admit this, right? Um, I'm trying to think of a corollary. In many ways, it's kind of like the secularization of everything in society. It's like no one wants to say God, no one wants to say they're religious. Like we sort of went through this whole era where it was like everything was trying to avoid like this like like sort of the god, like elephant in the room. It's like, oh, Bitcoin is this thing over here. No, it's like blockchain, crypto. Everyone's trying to like ignore like, no, actually, money is changing, and it's Bitcoin, and it's here, and you need to pay attention. And so maybe there's some sort of awakening happening finally.
A come to Jesus,
Yeah, come to
if you
Jesus.
will.
Yeah, come to Jesus moment. Exactly.
Awesome. Well, dude, well, so we're right at time. Before we go, any last words of advice or any plugs you want to give to the audience of Bitcoin Magazine?
Yeah. I think that there's a lot of advice thrown around in the Bitcoin space. Uh, it is important to stay humble. It is important to stack Sats. Um, but I would also say like focus on what your calling is, what you're good at. And just because you love Bitcoin doesn't mean you should work on Bitcoin. Find where you can provide the most value to the world. Do it really, really well. Pick something that has a future. Like build a really good way to figure this out is like build your own vision for what the future looks like and work backwards and see how you fit into that in a way that brings you joy and fulfillment. There's more to the world than just Bitcoin. Bitcoin is going to be a very important part of the future, but just because you're interested in it doesn't mean that it has to be your whole life. It can be something that the optimal stacking strategy is often is often getting rich elsewhere.
That's it's a great point to end on because I've said this to many friends, and I think it rings true as well, which is you want to be a pipeline from the fiat world into Bitcoin. You want to be a way by which dollars from other systems get allocated into Bitcoin, instead of simply just being a sort of pipeline within Bitcoin where Bitcoin over here gets allocated over there. And so I do think it's very important to continue to build those pipes and to you know those are the most important cogs in the network. Actually, it's the ones that can extend Bitcoin outward and help absorb the next thing.
Exactly. Very well said.
Well, Alex, this has been a phenomenal conversation, and thank you so much. And yeah, looking forward to having you back on soon.
Yeah. Thanks for having me on, Brandon.